Hey there traders, it's Jeff from thestockbandit.com. Thanks for joining me for this video. Last week we saw some really interesting price action as the market indices all pushed higher across the board. Most of that happening late in the week with a big rebound on Thursday and especially a gap higher on Friday following the jobs number. So what we had done had been to approach some upper resistance areas early in the week. We turned lower on Wednesday and kind of looked like maybe resistance was going to hold again. For the NASDAQ, we've seen this kind of broadening top type of formation or a megaphone pattern. You can see just how well described that pattern is. And we saw a pattern similar to this back in March for the Dow. It was right back here. We saw that that generally this tends to be a bearish pattern because you're kind of getting more volatility without price really making much of a move. But then if price is able to accelerate higher, it really negates this pattern. So going back to the NASDAQ, that's what's starting to take place here. We got just a close right near the upper boundary of that on Thursday and then a 30-point gap higher on Friday with some additional gains before the closing bell. So now the NASDAQ has a shot here. If it can hold this upside breakout from this megaphone pattern, then we've got a shot at negating that as a potentially bearish pattern. So for the week, this index tacked on 3%, which is very significant. But at the same time, we're also very stretched here, coming some 7% off these recent lows. So some profit taking and or basing action at this stage would come as no surprise at all. This is a really tough spot to be initiating new buys despite all this momentum that we're seeing because so many stocks have become very stretched here in the short term. So it's a time to really exercise caution and at the same time not really the type of move that you want to be shorting into as price gets extended here. It's really showing that the bears are really having nothing to hang their hat on. So it's really a time at this stage to just let the charts really kind of calm down, settle down a little bit, let the dust settle, allow some new bases to build, and then we'll have much more tradable opportunities facing us. For the S&P 500, this index was able to break out from this high-level trading range that it's been bound by. Again, on Wednesday, started to turn lower. Thursday recouped that, and then Friday broke out to the upside to new all-time highs, clearing that round 1600 number. And now it has a little bit of breathing room. This 1597 was the resistance area. So now it's got a little bit of room back down to that level. This index tacked on 2%. But the big story here is the potential for this to really push higher out of this trading range. And when you see this kind of rectangle pattern, what often tends to happen is you get a measured move higher. So in this case, that would bring a move potentially up to the 1665 area. So we'll see if that can play out. But nonetheless, a little bit of basing after a big rally for this index is also somewhat in order. For the Russell 2000, this index had been showing some signs of weakness compared to the others. Recall back here during the week of Easter where the other indices were able to push higher. This index did not make a new high. Instead, it pulled back, rallied to a lower high right there. That was the 951. This was 954. Pulled back, made a lower low, and yet we did hold support, which is down here at 894. Now, since then, we've rallied up. Wednesday, we started to roll over hard again. It looked like this trading range was going to persist. And then, of course, we rallied on Thursday and then into Friday as we saw this index make a new all-time high up at the 959 area. So it did close right at that 954 area. So at this stage, you still got to consider this to be a test of resistance. We'll see how the coming days pan out. This index was up 2% on the week, and here again, this index is up almost 7% from this low back here. So that's a significant rally. It's in excess of 6%, and we're talking about over 11 trading days. So certainly not very much time has elapsed for such a very large move to occur. So we need to see if this breakout is going to stick, and if it does, what we're looking at is essentially a 60-point trading range here, again with some potential for a projection to the upside toward that 1015 area. So it's going to be really interesting to see if that pans out for the Russell. And then finally is the Dow, which has been obviously range bound just like the others. We saw a breakout take place on Friday, and this index flirted for the first time really with a push through that 15,000 level. So got through that level temporarily, didn't close above it, but here again this index is coming out of about a 500 point trading range, so that would project a move up to the 15,380 area, give or take. This is 14,380. This is about 14,890. So we're really talking about 510 points. So it's got room to run here, but again, it's really largely going to be dependent upon whether the other averages are able to maintain their short-term momentum to the upside, or if instead we do finally see some of that healthy profit-taking action kicking in. If you're looking for some trade ideas to add to your own, stop by thestockbandit.com. We'd love to show you what we're all about. We do offer a free trial, and we'll hope to see you then. Other than that, I will have more for you soon, but until then, trade like a bandit.